So welcome to this Boutiques Connect with me, Mosidi Modise. I am joined today by Philip Short, who is a portfolio manager at Flagship Asset Management. It's such a pleasure to have you back here with us on Asset TV, Philip. Welcome.
Thanks for having me, Mosidi.
All right, so Flagship is no stranger to Asset TV. So could you tell us about the fund you're going to give us a view of, and then a little bit about the firm as well for our viewers?
Sure. So it's the Flagship Worldwide Flexible Fund of Funds, IP. And a bit of a short introduction on Flagship. We're a boutique asset manager established in 2001, and we specialize in global investments.
Awesome. And then looking at the fund's performance, it's really had a stellar period for 21 and a half years, really outperforming the market. What were the key drivers towards this?
Well, what we try to do is the aim of the fund is to give investors an inflation-beating sort of return. So with that in mind, we have quite a punchy benchmark of SA or South African CPI plus 5%, and the fund has managed to return sort of 3% annualized outperformance, so SA CPI plus 8%. So it's a real return of 8% for investors.
And Philip, what makes Flagship Asset Management's approach different from your peers?
Sure. So we are a specialist global asset manager, and I think the vast majority of our South African peers first started investing in local markets, South African markets, and then only later down their timeline did they venture into global markets, where we started with global markets, and ever since then up to today, our focus and our DNA has always been global markets. So that's the first one, and I'd say the second one is we have a very, very disciplined buying and selling process, but we do take an unconstrained approach. And by that I mean is that we style agnostic, so we embrace all investment styles, be it value, growth, quality, GARP, etc. We utilize both bottom-up and top-down analysis. And then we don't look at just certain geographies or just emerging markets or just developed markets. We look globally. So in that respect, we don't limit ourselves. We don't constrain ourselves in looking for the best opportunities for our clients.
And Flagship has two different worldwide flexible funds. How are they different?
Okay, yeah, good question. So they both have a 20-year plus track record of outperforming their benchmarks. The Flagship Flexible Fund is a single manager fund, and that's the one that Flagship manages 100% of. And the Fund of Fund is a part of the fund, the same Flagship team, global team managers. And the other part of the fund, we utilize best of breed sort of global equity managers to manage the remaining part of the fund.
And could you tell us a bit about the structure of the fund?
So equities over time are the best performing asset class we've found. So both flexible funds are equity centric, meaning we'll own more equities in those funds, both funds, than any other asset class. In the Fund of Funds, the first building block is selecting 6 to 7 best of breed global equity managers, and we do a lot of manager research and due diligence in identifying those managers, and 60% of the fund is then allocated to those global equity managers. So at any point in time you should have a minimum of 60% allocation to global equities. The other 40% the Flagship team manages on a top-down basis, and with that 40% we could be adding to that 60% global equities, we could be adding local equities, commodities, local bonds, foreign bonds, etc. So just to give you an idea, on that 40% currently, 7% is allocated to gold bullion, 10% to South African equities, specifically JSE Midcap and Satrix FINI ETF. That we allocated just before the SA elections, and we wanted to get exposure to SA Midcap specifically, not any of the other big all-share names like Naspers or Richemont. Then we have 10% US dollar cash. We have 3% US small caps through the Russell 2000, and smaller positions, one of them being a China K-Web ETF, which gives us exposure to China, consumer discretionary and internet.
And also, who is this suitable for?
Yeah, good question. We always have to think about the client and have them in mind first and foremost. It is for people staying in South Africa that want protection from a long-term devaluation from the rand, that want exposure to global markets via a rand-based fund, who ultimately want to beat inflation in SA and want to partner with a fund manager who's got a track record of doing so.
And last question is, if investors want to get access to this fund, where can they get it, on which platforms?
So for wealth managers and financial advisors, we're on most list platforms. So 91, Old Mutual, Momentum and Glacier. And for retail investors, they can get a hold of us directly through our website where our contact details are and they can contact us directly.
Great. Well, Philip, it's been really nice to have you and have this discussion with you. Thank you so much.
Thanks a lot for having me.